It pays to keep tabs on companies that are about to go or have recently gone public. Oftentimes, stocks make major price moves within a few weeks, months, or years of their IPO. An initial public offering, or IPO, is when a privately held company makes its shares available for trading on public markets, such as the NYSE or NASDAQ. Here are 3 basic rules you can use to help find the best IPO stocks. Rule number 1, look for new issues showing the characteristics of leading stocks throughout history. Decades of market research shows top stocks typically have these traits before they make big runs. For example, stocks showing current earnings with at least a 25% quarterly increase, annual earnings with at least a 25% rise in the past 3 years, new products or new trends, higher up volume than down volume, strong industry group leadership, and solid institutional sponsorship. Pro tip, since many early stage companies are not yet profitable, traders should put an emphasis on top line growth with IPO stocks. Rule number 2, resist the temptation to buy IPO stocks right when they go public. The goal is to spot top IPO stocks early while minimizing your risk. It's not always a great idea to buy an IPO fresh out of the gate, no matter how much hype there might be surrounding the new issue. But you can still reap big rewards by waiting for the stock to prove itself before you invest. Ideally, we want to wait for IPOs to form bases and then break out. The framework for spotting an IPO base is simple. First, we'll typically see a decline from peak to low of no more than 20%, but volatile stocks may produce declines of up to 50%. Second, the length is often less than 5 weeks and can be as short as 7 days. This is different from other IBD bases, which typically need at least 5 to 7 weeks before they count as bases. Third, the pattern will typically start within 25 days of the stock's first day of trading. A final key is that we ideally want to see the stock form its base above its IPO price. Rule number 3, IPO stocks don't have long track records in terms of trading history and tend to be more volatile, so you may want to reduce your position size to help manage risk and use quick rules to get in and out of that initial move. Be sure to check out investors.com to find and keep track of the latest IPO leaders.